Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Trilogy Metals.
If you find our talks useful, please consider subscribing, like, and maybe drop a comment underneath.
It really does help us out.
It does. That engagement helps us keep the lights on and the data flowing.
Absolutely. And today we've got a fascinating one. It's a company that, it forces you to throw out the traditional rule book for valuing a stock.
We're talking about Trilogy Metals. Okay, I've been staring at the ticker for this one all morning, and frankly, I'm scratching my head.
I get that.
I'm looking at this chart, and it looks like a rocket ship. I mean, we were talking about a stock that was up nearly, 170% in 2024?
And it just kept going.
It just kept going. It rallied over 300% in 2025. You zoom out, it's just been on an absolute tear. But then I look at the fundamentals, and I know we'll get to this, and it just seems like there's nothing there.
Right.
No revenue, big losses. Usually when I see that combo, I think meme stock or, something's not right. Why is this different?
That is the initial reaction for almost everyone who isn't deep in the resource sector. It looks totally disconnected from reality.
Yeah.
But with Trilogy, you have to understand, you aren't buying a business that sells widgets today. You are buying a claim on the future of the American energy grid.
Okay.
It's a junior miner, but it's arguably the most senior junior miner in the market right now.
Junior miner. That term always scares me a little. It makes me think of some guy with a pickaxe and a donkey and just a lot of debt.
That is the classic stigma, for sure. The lonely prospector, panning for gold and praying for a miracle.
Right.
But Trilogy is fascinating because it totally breaks that mold. Yes, it's technically a junior. It's pre-revenue, exploring the Ambler mining district up in Alaska.
Okay.
But the reason we're talking about it, and the reason the stock has gone parabolic, is that it is not doing this alone. It has what I like to call rich friends.
Rich friends. I like the sound of that. Who exactly is backing this?
It has two massive backers that just completely change the risk profile. First, you've got South 32.
Okay, I know them. Big player.
A major, diversified global mining company. And they're not just a passive investor. They're a full 50-50 joint venture partner in the project.
So this isn't just Trilogy hoping to build mine. They have a partner who actually builds mines for a living.
Exactly. It brings an operational credibility that, 99% of juniors just do not have. But the second backer is the real headline grabber.
And that would be?
It's the United States government.
Wait, really? The Pentagon is playing the stock market now?
In a strategic sense, yes. We've seen a strategic investment of roughly $35.6 million from the U.S. federal government.
Oh.
And that's going directly into the access infrastructure for this project. It's all part of this broader push for critical mineral security.
So things like copper, cobalt.
Exactly. The government has finally woken up and realized that if they want an electric future, EVs, wind turbines, all of it, they need copper and cobalt. And they'd much rather get it from Alaska than, rely on some very complex foreign supply chains.
So let me see if I have this straight. The elevator pitch is, you've got a high-grade asset in a safe jurisdiction, Alaska. It's full of copper and cobalt, which the green transition needs, and it's being bankrolled by a mining giant and basically the U.S. government.
That is the why now.
Yeah.
It is a leveraged play on U.S. critical minerals with a massive political and financial moat around it. That is why the stock is sitting where it is today. It's not about today's revenue. It's about tomorrow's geopolitical necessity.
Okay, that sounds great on paper. Uncle Sam's my business partner.
Yeah.
But I want to dig into the actual numbers because I'm seeing some ugly things in the financial statements.
I do it.
I pull up the latest report, and the first thing I see under revenue is a big fat zero, nothing. And then a net loss of around, $9.18 million? For someone building a wealth portfolio, how do you justify that? It looks like they're just setting money on fire.
This is the biggest mental hurdle for investors, moving from general stocks to resources. You have to shift your mindset from revenue to asset value. In tech, a net loss is bad.
Right. It means your product isn't selling.
Exactly. In mining exploration, a net loss is just investment.
Walk me through that. How is a loss an investment?
Think of it like building a skyscraper, right? You have to buy the land, pay architects, dig the foundation, pour concrete. You spend millions for years before you ever rent out a single apartment.
So you have zero revenue, massive expenses.
Right. But does that mean the project is failing? No. It means you are in the construction phase. That $9 million loss for Trilogy, that wasn't money wasted. That was money spent drilling holes to prove how much copper is there, or paying engineers to design the mine.
So they're in the construction phase, not the landlord phase.
Precisely. And if you look at their cash flow, it's negative for the same reason. They're front-loading all this capex into these long-life assets. But here's the safety net, and this goes back to those rich friends. Look at the balance sheet.
I'm looking at it now. The debt levels are surprisingly low.
Which is incredibly rare for a company this size. Usually, junior miners are just drowning in debt or constantly issuing new shares to keep the lights on.
So Trilogy has a strong cash runway.
Very strong. Because of the JV with South 32 and that federal funding, they aren't shouldering the burden alone. That $35 million budget for 2026, they aren't scraping that from their own savings account.
It's almost like they're leveraging other people's money to increase the value of their own equity.
That's the key. They are effectively levered to the project's success without the crushing weight of, high-interest debt. That federal investment was a game changer. It means they can survive the time it takes to get permits.
Which is where most juniors fail, right?
Those juniors die in the waiting room of permitting because they run out of cash. Trilogy has enough cash to wait.
That is a huge distinction. Okay, let's pivot to the chart because the price action is where the rubber meets the road. We're recording this on Monday, January 26, 2026. Stocks trading around $4.80 to $4.92. My question is the classic FOMO question. Is it too late? Did we miss the boat?
It's a valid fear after a run like that. I mean, you see a vertical line on a chart, your instinct is to run.
For sure.
But let's look at the structure. Technically, the stock is in a very strong position. We have a golden cross structure that formed a while back.
For those who aren't technical wizards, what does that mean?
A golden cross is when the 50-day moving average crosses above the 200-day. It's a long-term signal that momentum has shifted from bearish to bullish.
Yeah.
It usually means a new floor has been set.
Okay.
But what's more interesting to me right now is the RSI, the Relative Strength Index.
Where is that sitting? After a 300% run, I'd expect it to be screaming overbought, like at 80 or 90.
You would think so, but it's actually sitting in neutral territory, right around 45 to 50.
Wait, how is that possible? If the price is up that much, that doesn't make sense.
It means the stock is digesting its gains.
Mm.
It shot up, and now it's trading sideways, consolidating a bit, letting the moving averages catch up.
Oh.
Think of it like a runner who just sprinted a mile. They aren't collapsing. They're jogging to catch their breath before the next sprint. That is actually very bullish. It suggests the market is comfortable here and isn't rushing to sell. It's a reset within an uptrend.
So as I'm looking for an entry, I'm not catching a falling knife. Where's the support?
Immediate support seems to be in the low to mid $4 range. If it dips there, buyers tend to step in. But the real floor, the concrete foundation, is at the breakout zone of $3 to $3.50.
And what's the blue sky? If this keeps going, where are the analysts saying it could land?
The average analyst target is roughly $7.75, with a high target of $10.
So from where we are today, you're looking at anywhere from 30% to over 100% potential upside.
Exactly. The technicals suggest we're roughly halfway through the move if the fundamental thesis holds.
And the flow seems to back that up. I'm seeing a lot of green days.
15 green days out of the last 30. And yeah, the volatility is high, about 7.5%, but for a momentum name, that's par for the course.
Okay, so the chart looks good. The financials are safe-ish for a miner. What about the vibes, the sentiment? Are people excited, or is this a wall of worry?
I'd call the sentiment somewhat bullish to strongly bullish. The news flow has been all about that federal funding. That was a massive stamp of approval. But we also saw some key leadership changes recently, like bringing on Egizio Bianchini as a strategic advisor.
I saw that name pop up. What's the significance there?
Well, it signals a shift in strategy. You don't bring in heavy hitters like that just to keep the lights on. You bring them in to cut deals.
Ah, okay.
It suggests they're gearing up for the next phase, a bigger partnership, financing, maybe even M&A.
Right. But then I look at the official ratings. The consensus is hold. That sounds uninspired.
It's very common for pre-revenue companies. Institutional analysts are just conservative. They often won't slap a buy on something until they can see a clear path to cash flow.
But they're price targets.
Exactly. Look at the price targets. They rated a hold, but set a target 60% higher than the current price. That tells you their models show the value, but their compliance departments are cautious.
So it's like a wink, wink, hold. We officially say hold, but look at our $10 target.
Precisely. And while we haven't seen huge insider buying, I would argue that the U.S. government and South 32 involvement acts as a quasi-institutional endorsement.
That's a good way to put it.
If the Pentagon is writing checks, That's better than a CEO buying 5,000 shares.
Fair point. Okay, let's look forward. We're in early 2026. What's on the calendar? If I buy this today, what am I watching for?
The roadmap is pretty clear. First, the budget. A $35 million program has been approved for Ambler Metals for this year. That money is for finishing the mine design and getting ready for permitting.
Permitting. The magic word, or the cursed word, depending on who you ask.
It's the main event. The target is to submit the permits for the Arctic project around 2026. That is the binary event. Once that application's in, the clock starts ticking.
And in the background, we have the macro stuff.
Right. The U.S. critical minerals policy isn't going away. Every time you hear a headline about trade tensions with copper or supply chain issues, that is a tailwind for Trilogy. The more the world fragments, the more valuable a domestic U.S. copper mine becomes.
And we'll get more drilling results too, right?
Yes, geotechnical drilling at Arctic, and, importantly, exploration at the Bornite deposit.
That's the other deposit, the cobalt one.
Yes, Arctic is the main copper-zinc play, but Bornite is massive and rich in copper and cobalt. It's like dessert after the main course. Good results there could add significant value.
Okay, I'm feeling pretty optimistic here, but my job is to be the buzzkill. Let's play devil's advocate. What goes wrong? Why does the stock go back to $2?
The biggest risk, hands down, is the road.
The Ambler Access Road. I keep hearing about this. Why is a road such a big deal?
Because the Ambler mining district is in the middle of nowhere. To get the ore out, they need to build a 200-mile industrial road.
And that's controversial.
Very. There are environmental concerns, subsistence hunting concerns from local communities, and lawsuits. Without the road, there is no mine. It doesn't matter how much copper is in the ground if you can't get it on a truck.
And this is where the politics gets messy, because the government's involved.
It gets very complicated, and this is the second major risk, the regulator paradox. The U.S. government is an investor. They put $35 million in. But the U.S. government is also the regulator who has to approve the road.
That sounds like a conflict of interest.
It creates a strange dynamic. On one hand, you think it guarantees approval. On the other, it puts a massive target on the project's back for lawsuits.
Because opponents will argue the government is biased.
Exactly. And that can slow everything down for years. And time is money.
Which leads to the third risk, dilution.
Bingo. Even with partners, building a mine costs billions. If the road gets delayed by lawsuits for 3 years, that's 3 years of cash burn. Eventually, they might have to raise more money by issuing more shares, which dilutes current shareholders.
And since they are pre-revenue, if the price of copper crashes, they have no cushion.
Correct. Their lack of revenue becomes a liability if the market turns against commodities.
So it's a high-stakes poker game. You're betting the government's strategic need for the metal outweighs the legal friction of the road.
That is the core wager.
Okay, we've looked at the upside, the downside, all of it. Time for the final verdict. Where do you land on Trilogy Metals?
I'm giving this a bullish score of 8 out of 10.
An 8? That's pretty high for a junior miner.
It is, but the moat here is undeniable. Trilogy is a district-scale play on U.S. energy independence. You just can't find many projects with this grade of copper in a safe jurisdiction like the U.S.
And the financials are de-risked.
Exactly. They're safe relative to other juniors because of South 32 and the government backing.
Yeah.
And the technicals show a strong uptrend that is resting. It's a great setup.
So what's the strategy? Buy now.
This is a multi-year hold. You are not day trading this. You're playing the 2026 permitting window. My strategy would be to look for those technical pullbacks. If it drops to the low $4, that's a buying opportunity. You accumulate and you wait.
A copper play with Uncle Sam as your business partner. It is definitely a unique story.
It is. And it shows how the definition of smart wealth is changing. It's not just about PE ratios anymore. It's about geopolitical alignment.
Well said. And that brings us to the end. But before we go, I want to leave you with a thought. We talked about the risks, the road, the regulators. But think about this. If copper really is the new oil for the green energy transition, and the U.S. is desperate to own its supply chain, does the regulatory risk matter as much as the strategic necessity? At what point does too big to fail become too important to permit block? Something to chew on.
That is the multi-billion-dollar question.
Thanks for tuning in to Smart Wealth with Joshua. We'll catch you in the next one.
Happy investing.